Beneficial tax policies for foreigners doing business in Singapore. Due to the country's low taxes and multiple incentive programs, Singapore has become a tax haven for many entrepreneurs and investors worldwide. Take a look at some of the most beneficial tax policies foreigners can enjoy when they set up their company in this modern city-state. In Singapore, residents benefit from progressive personal tax rates from 0% to 22%. This means that the tax rate of every resident is proportional to the annual income they earn. For individuals earning less than $160,000 annually, their tax rates range from 0% to 15%. On the other hand, individuals earning $160,000 to more than $320,000 can expect their tax rate to range from 18% to 22%. For non-residents or foreigners working in Singapore, their tax rate ranges from 15% to 22%. Having a progressive tax rate allows people to enhance their real spending power without being a burden on their income. Although Singapore promotes a standard corporate tax rate of 17%, the government allows partial tax exemptions for the first $200,000 chargeable incomes of eligible businesses and other incentives introduced by IRAs. Startup Tax Exemption Scheme. This was introduced in 2005 with the goal of supporting emerging entrepreneurs and their businesses in the country. In 2020, qualified startup companies can benefit from a 75% tax exemption for the first $100,000 of their chargeable income during the first 3 consecutive years of doing business. Afterwards, they can benefit from a 50% tax exemption for their next $100,000 of the chargeable income. Partial tax exemptions. This scheme allows businesses to get a 75% tax exemption for their first $10,000 chargeable income. Another 50% tax exemption can be applied to the following $190,000 chargeable income. Besides tax exemptions, Singapore also provides several tax incentives to offer financial support to foreign investors. These incentives include Wage Credit Scheme. As part of the government's support package, this scheme enables governing bodies to co-fund the increase in wages for Singaporean employees earning a monthly salary of $4,000. As of 2021, the government provides 15% of the gross wage increases for employees earning up to $5,000. Industry-specific incentives. Apart from the universal schemes available, the government also offers industry-specific incentives to adequately cater to diverse business needs. The government agencies responsible for enacting these incentives include Singapore Economic Development Board, Inland Revenue Authority of Singapore, Enterprise Singapore, Monetary Authority of Singapore, Investment Allowance Incentive. Administered by the Economic Development Board, this incentive enables businesses to enjoy a 100% tax exemption on fixed capital expenditure. According to the governing agency, a fixed capital expenditure is any expenses incurred to finance qualifying projects within the period of 5 to 8 years. Besides the existing tax incentives, the Singapore accounting body likewise offers corporate loans for businesses that may need additional financial support. Loans such as venture debt loans, SME assets loans, and merger and acquisition loans can help give foreign entrepreneurs the footing they need to kickstart their companies.